Okay, let's get started. So, welcome everyone back to Westwood's macro overview webinar session. This is the Q4 and it is our final one of the year. I know how time flies. It's actually a real pleasure to be talking to you today from our London office where most of the team are, albeit in different rooms. But really great to be back here and being a bit more live with each other. So coming up, obviously with COP26 around the corner, and as you'll have seen from our materials, we will be looking at COP26 in a bit more detail today, as well as some of our usual aspects. Bit of housekeeping as usual. The session will be available on demand probably tomorrow, so watch your emails for that coming through. There'll be a poll question coming up towards the end, but as normal, we'll have our Q&A session at the end, and you've got your Q&A buttons to submit questions throughout the session. If there's any that we can answer as we go through, we will do. If not, we'll address those at the end. As normal, we should be running to about an hour, but like I say, feel free to post any questions on the way through. Thanks, Peter. I'm not going to go through this slide again today. If you don't know what we do and who we are, please get in touch to find out more about everything that we do. We produce a lot of content. Most recently, we do a lot around energy transition insights, and all of this is available for you to sign up to on the site, as well as demonstrations to all of the products we do. And of course, we do a lot of bespoke work through our commercial advisory, but please do reach out. I'll post some links throughout the session if you want to get in touch. So on the call today, we have a lot of faces that should be familiar to you now. Arindam Das, who's group head of our consulting. David Linden, head of energy transition. Mr. Peter Heath, thank you, Peter, once again for putting the deck together. And we're also joined today by Graham Bagley, who's head of our global E&A. So a lot of heads floating around here today, which will get a picture of heads moving around screens, but there we are. We also have a couple of senior analysts on the line as well, who'll be able to support with questions as we go through. That's it from me. I will see you towards the Q&A, but Arindam, over to you for the agenda.
Thank you, Gareth. Hello, everyone, and welcome to the final macro webinar for 2021. As Gareth said, as we head into COP26, we wanted to take this opportunity to focus this session primarily around COP26. So in terms of the agenda, we will start, as always, with an overview of the oil markets and offshore FIDs, oil and gas FIDs. We will then move on to a quick reminder of COP26 in terms of what is it, why is it important, and a quick snapshot of the timeline vis-a-vis the key events since the adoption of the Paris Agreement in December 2015, leading up to COP26. This will be followed by a look at the world today in terms of net zero commitments, pledges, and targets to get a sense of where are we, how far have we come, and what else do we need to do. In particular, we'll highlight the major carbon dioxide emitting countries, as well as the countries who are the key drivers of oil and gas supply and demand as of today. Finally, we'll look at the outlook for high impact exploration in the context of the energy transition. And we've also present to you with a brief case study on the UK to illustrate primarily the complexities of the energy trilemma. The trilemma, as most of you are aware, is underpinned by three pillars: the energy security, energy equity, and environmental sustainability. So the UK case study, I think, will help showcase some of the complexities around the trilemma. We'll finish the session with our key messages leading into the polls, and then finally the Q&A session. So without any further ado, let's get started with the oil markets. So in terms of the recent past, I think the key things to bring out is that if you look at the extreme left chart, all the way from sort of the beginning of the year, Brent prices have been on a rise. And during Q3, the prices averaged about 74, but they did break the $80 mark. And subsequently in October, that's definitely been the case. Now, what really happened in September was that we obviously had, Hurricane Ida. We had US production come down to almost about 10 million barrels a day before averaging roughly about 10.5 million barrels per day in September. So there was quite a bit of oil that came out of the market. And subsequently, as a consequence of that, you saw the prices rising. And as prices started to rise, obviously everyone looked into OPEC Plus to understand what could be done. However, the key thing that came out of that meeting, and certainly the actions that came out of that, was that the members were already struggling generally to meet the quota increase. The 400,000 barrels per day monthly increase, that quota increase is already a fair bit of struggle with some of the members. So the bloc held firmly to its plan to boost supply by 400,000 barrels in November. And also, it's worth pointing out that actually the bloc actually remains quite cautious today about COVID, about demand. They also see a lot of supply coming into the market over the course of 2022. So as a whole, the bloc is not too keen to increase production at this stage. So we are at that stage where the balance is quite delicate, as it has been for the vast majority of this year. So to summarize, looking back in the mirror, September, we saw high demand, we saw some recovery, but also equally, we saw supply being constricted. And that was the perfect recipe to actually get prices to where they are today. Now, if you want to look into the next slide and think about what's going to happen over the rest of the year and looking forward into 2022, it's a very interesting story. So the key thing to point out here on the right-hand chart is that the OECD stockpiles are actually almost at pre-pandemic levels. So you can see how, with the production coming off the market, but demand still being there, we started to actually look into those stockpiles and we started to drain them out. But in reality, those stockpiles today are almost close to pre-pandemic levels. Demand is there, but equally, I think the supply side has been quite disciplined. And again, as I said, that's a perfect recipe for supporting the prices where they are today. So fundamentally, I think in Q4, we do expect the market to remain undersupplied, as you can see from the left-hand chart. But as we move into 2022, particularly in Q1, if OPEC continues to go on its path of releasing those 400,000 barrels per day, we will get into a situation where I think there will be oversupply in the market. And that's really a function of the fact that in Q1, with the seasonal slowdown in demand because of driving season, you start to run into the structural challenges. So as a consequence of that, there could be downward pressure on the price. So ultimately, looking at the evidence in terms of what OPEC Plus has been doing, all we can think about is that if we were to run into that situation, then probably the market will need to re-intervene, and the bloc certainly will have to re-intervene at that point. So a lot remains to be seen, but for the balance of this year, I think it's fair to say that the general consensus is that $70 plus is sustainable, but then we run into some challenges as we head into H1 2022. So with a robust oil price environment and a commodity price environment, if we then start to think about COP26, we start to think about the IEA report about no new offshore oil and gas developments as part of the pathway to net zero from 2021, the report that came out in 2021, how does that actually manifest itself in terms of what's happening in the realm of offshore FIDs? And what we see here is that based on our data and our analysis, we see that the number of FIDs in 2021 will be significantly higher than 2020. So we expect to reach about 73 FIDs over the course of 2021. But then this number actually goes even higher in 222 potentially in 2022. So a lot more FIDs coming up over the course of next year potentially. And this really is in stark contrast to what the IEA has suggested as part of its pathway to net zero. Worth pointing out in the right-hand side, apologies for the chart, but what we're really trying to show you in the map is everything that has been sanctioned over the course of 2021, but also things that we expect to be sanctioned over the course of the balance of this year. So for the balance of the year that we think the key projects would be the likes of Scarborough with Australian Woodside. We also have Crux from Shell in Woodside, and then Dalma from ADNOC in the UAE. And if we were to just take a moment to highlight some of the key big projects that we think in 2022 are likely to pass FID. So those would be the likes of Bonga Southwest and Shell from Shell in Nigeria. We've got the Zuluf incremental project in Saudi Arabia, but also further along the North Field compression project in Qatar, etc. So a lot of projects in the hopper, and certainly from the evidence that we're seeing, it doesn't appear that the FID pace or the momentum has started to slow down. So it's just worth bearing that in mind as we start to head into COP26 and what the IEA report has suggested to us. Having said that, now I think it'd be a good time to actually pass it on to my colleague, David Linden, to start taking you through COP26.
Perfect. Thanks very much, Arindam, and rightly so. I think this is meant to be the year of change, of that kind of pivot happening. You know, the COP kind of the thought process is all about, well, look, this is a place where we should now be, that we look and go, right, okay, where do we go from here to really push and accelerate things? But actually, you know, the slide before and the way the sub-market sentiment currently is doesn't exactly suggest that for the oil and gas industry, you know, this is really a year of change or a year of pivot. In fact, it looks almost like BAU. So look, I mean, what I really want to cover off in the next couple of slides, and it's pretty basic stuff in some way, but it's useful to sort of get into that. What is COP actually trying to achieve? So we put a reality check around this year of change and what COP's actually trying to do. I think before my colleague Peter after me will go into a little bit more into the targets that are being set and the kind of implications this has. So let's start with, I guess, the most basic of all questions. You know, what is COP? For those of you who don't already know, COP ultimately is stands for Conference of Parties. This is the decision-making body that was put together for the states of near 200 states or so that signed the UN FCCC. Many acronyms coming up, so my apologies, but that's the UN framework for the Convention on Climate Change that was signed in '94, and ever since then, so if you add 26 plus one because of COVID, of course, you get your different COPs that have happened since then. Where countries have really decided, okay, what are we actually going to do about this thing called climate change, and specifically human-induced climate change? And there've been a series of agreements since then. You might remember things like Kyoto, etc. But really the most sort of fundamental one that came into play was the Paris Agreement, December 2015, that Arindam also mentioned. But that was really the first legally binding commitment that states made, or countries made, should I say, to reducing their greenhouse gas emissions. So it's really a legal process that they're following more than anything else, but with a commitment to reducing or limiting, should I say, global temperature warming to 2 degrees, and if possible, down to 1.5 degrees. So it's really a legal framework or a process that people are now part of, these 200 states or so are part of, to try and achieve that limitation in global warming. But what is it actually that COP26 is trying to achieve, and why is it such a big thing in the first place? So number one, I guess it's really about, and this is the headline thing everyone talks about, is it's about securing net zero. And what do we mean by that? It's really about achieving or limiting temperature growth to 1.5 degrees by mid-century, so that's 2050. And when we talk about net zero, that's obviously a balance between emissions that are emitted and ones that are then soaked up by carbon sinks, such as forests or carbon capture facilities. So it's that balance that we're going to have by mid-century, by 2050, which is going to allow us to achieve 1.5 degrees of warming. So it's kind of, think about a budget of carbon and how much you can take in and out. We're trying to balance that because we've reached a certain level already. And the point is, we've reached 1 degree already. And so getting from 1 to 1.5 is not a big step in itself in terms of total temperature rise, but of course it's a big step in achieving that. But underneath all of that, there are other aims, and these are the sort of number 2, number 3, number 4 on your screen in the middle here are really the key other aims. And they really highlight something which is quite important, which is all very well to put targets in place and say that you need to reach this. It's really then the tools that you need to make it happen. And the biggest of these is really about ensuring that developing countries, as they are termed here, that are maybe historically not part of the emissions build-up and are still to industrialize or at least follow an economic growth trajectory that's higher than more mature countries, they need finance and support to be able to achieve the transition. And so there's been a commitment in the past to say, look, we're going to provide 100 billion a year of climate finance to developing countries to achieve that. But of course, as such, that full figure hasn't been reached. And so what COP26 is trying to do is ensure that that number's there, because otherwise a number of countries simply can't afford to do the transition themselves. And because we've really reached 1 degree out of the 1.5 or so that we want to have, the reality is it's not just about prevention, so investing in solar and wind and those sorts of things. It's also about adaptation. High rise, so rising sea levels, even of quite small magnitude, actually does mean some big impacts in island nations and in other countries as well, such as Bangladesh, that have a low close to the sea level. And there's also natural habitats that are increasingly being needing to be adapted to be able to survive the change in temperature. Not forgetting that, of course, 1 degree is an average. Well, of course, some parts of the world are getting hotter and others not as much. And then fourthly, it might almost sound silly, but it's agreeing the rule book to implement the Paris Agreement. So there are actually not all the full rules in place as to how do you take this legal document that we've all signed and said we'll do this and actually fully translate that into national law, and how do we ensure that we ourselves are keeping on top of what we said we would do. And this is all important, and my colleague Peter will talk about this in just a minute, around really the reality as to the commitments people are making and what that means in terms of actually doing something about it. But the reason for walking through these 4 aims really is we often focus on the first one, but the reality is number 2, number 3, and number 4 are just as important to be able to achieve number 1. And that's the kind of, often gets wrapped up in what I would call the just transition as well. So making sure that people equally can transition without too much disruption. That is an underlying factor in all of this and needs to be considered. But why is this important? I mean, this sounds like many a statement that you've heard before from various agendas by the UN. Well, COP26 is really the first time that a number of these states are going to sit down and say, okay, how are we doing? Are we doing okay or not? And let's see what your individual action plans are. And there'll be some name calling or calling out, shall I say, maybe of individual names or countries as to whether their nationally determined contributions, their contribution to reducing global warming is actually sufficient and fit. And that process is already beginning now. If you sort of read into the background of this, sort of various countries are being called out that their NDCs, their nationally determined contributions, just aren't sufficient. And then COP in itself should therefore really be about accelerating action towards the goals of the Paris Agreement. And I'll just talk about that on the next slide a little bit more. But ultimately, we've nicely bolded it for you here so you can see it yourself. But if not now, then when, right? So this is meant to be the time that everyone gets together and says, yes, let's do this, because we're down the line, we're assessing where we are we doing enough? Probably not. Let's do more. And if that doesn't happen, then that's really a failure from COP26 if that doesn't happen. Can we go to the next slide, please? Thanks, Peter. So really, I mean, this is just a timeline in itself to remind ourselves how we got here. But from when the Paris Agreement was signed in 2015, you can see there's not a lot that you could argue really happened between 2015 and 2019 until the public's eye and maybe the industry's eye. So folks like ourselves who spend our time looking at where supply demand going, where's price going, etc., maybe not realizing what's going on in the background. But a core part of what happened between the end of 2015 was about getting the Paris Agreement not just adopted but also translated into people's national parliaments so that they would actually ratify it there. which has happened for the majority of countries. Maybe I think there's a handful, places like Iran, who haven't ratified it, but the majority of countries had. Well, more than the majority, 98% or plus. But really between 2015 and 2019, there's a couple of things that happened, but the core one was that the IPCC, so that's the Intergovernmental Panel for Climate Change, really a body that's there to educate everyone of what is actually happening on the man-made or human-induced, should I call, climate change, published the 1.5 degree special report. And that really highlighted, and it was one of the outputs from the Paris Agreement, that they would do this, look more at the 1.5 degree side of things. It really highlighted that you're going to have to get to 1.5, not 2 degrees, to really make a relevant impact on global warming, because the difference between 1.5 and 2 degrees is actually still very significant on the impact on economies, nations, and companies, and the risk that they face with their own assets. And so that's actually quite an important development that happened in the first sort of few years after Paris, is that we went from 2 degrees to 1.5 degrees as the number that everyone should be focusing on. And that really translated in 2019 to the UK passing a law in itself and actually committing to legally saying that I want to be the first major economy, as a G7 here, to commit to getting to net zero by 2050. So that was quite a seminal moment in that sense. An old, rich nation that's contributed significantly to climate change in the past, actually saying it now, which is to pass to make net zero part of its legal commitment, and the government needs to work towards that, which is really putting 1.5 degrees into law. And then company-wise, from an oil and gas perspective at least, Repsol was then the first oil and gas company to commit end of that year to net zero across its value chain. And that's important. We're not talking about 1 and 2 degrees here. We're talking about the whole 1, 2, 3, which is your own emissions that you have direct control over, and scope 3, your customers, all those consuming your products as well. And then really 2020 was a fascinating year, because that was the year that a lot of other economies stepped up and said, look, we wish to commit to this. And legal commitments were made by the EU, Japan, and Korea, and China pledged. And it wasn't a legal commitment, but made a pledge to say we'd have carbon neutrality by 2060. Now, the US flip-flopped during this time. If you recall, in 2017, Trump said he'd pull out, did pull out, and then a few months later, the US rejoined under President Biden. And so, while the US was probably the biggest talking point across all of this, the background has been significant change in step from 2 degrees to 1.5 degrees, and really key major global economies committing to, and at least pledging also, to carbon neutrality or net zero. Now, Rendon's also mentioned the IEA roadmap that was published as well, and that was a key point, because really what it said was a couple of different things. Getting from 1.5 to 2 degrees is a massive thing. While the number might look small, overall, the requirement of any economy to get there is significantly different. There is a lot more spending that's required to get to renewables, a lot more spending that's required on things like hydrogen, CCS, etc., and it needs to happen faster. That was one of the key things. But of course, as Rendon also highlighted, it also suggested that we're almost too late, in the sense of milestone 1 was to be met. It should have been met this year, and that's not happening. In fact, next year, as in sanctioning of new projects, is also happening next year. And then finally, every country in itself and every company will decarbonize differently. That's another outcome from the IEA net zero map that I think they recognize very well. And the difference between global north and global south, and some of the follow-up reports, are very important. And I do suggest folks do consume that a little bit, because it does at least talk about a lot of the varying factors you need to think about, even if we are past some of those milestones already. So it does look quite negative, to be frank with you, if we think about, yes, lots of companies committing, but we are a little bit late. And of course, if you look at the chart on the right here, temperatures have continued to rise during the period of time that we've had the Paris Agreement. But I guess a lot of that has been about securing what we really think is the requirement, countries starting to commit, but not having done enough yet. And it's really in the last month or two that you've started to see a few little extra things that have come out. A few extra countries are committing, and again, Peter will talk to that. But it's little things like methane pledge from the EU, yes, and US, with of course methane being one of the more potent yet short-lived greenhouse gases. In fact, I think it's contributed a significant amount that people often underestimate. It's much more about methane than CO2 in many cases. The US has said it will contribute more to the $100 billion fund, and China's said it would stop funding overseas coal-fired power plants. So these are all little green shoots to think about. But let's just say, a lot has happened, but a lot hasn't happened at the same time. So there's actually a lot of work to do at COP26 to make sure that we get some outcomes that are of value. Peter, over to you.
Brilliant. Thank you, David. So now that we've taken a look at what COP26 means and kind of the history building up to date, I thought it would be good to take stock of where we are at the present day and see kind of how fitting current net zero commitments around the world are against the greater objective of 1.5 degrees or net zero by 2050. So here on the left-hand side, I'm presenting a map of the world which shows the level of net zero commitment by country, with green showing legally binding commitments, i.e. net zero has been passed into law, orange showing where targets have been set or pledges made, and then red showing where perhaps plans are still under discussion and decisions are yet to be made. And what you'll see is that net zero commitments are predominantly concentrated in Canada and Western Europe, though there are a few other net zero countries out there, so for example, Japan, New Zealand, etc. What we're also starting to see is a growing momentum towards countries actually setting targets or making preliminary commitments. So that would be the orange countries. And a few key countries to draw out here would be the UAE, Saudi Arabia, and Russia, all, as we know, big emitters. They've all recently announced plans to achieve net zero by approximately the middle of the century. Now, this is a snapshot in time. It's the view as of today. But as we build towards the COP26 summit, of course, new pledges are going to be made. And we've all seen the announcements in the news showing an evolving landscape on a nearly daily basis. So now we've got an idea of what the distribution of net zero commitments is. How does this actually translate into effective mitigation of climate change? So looking at the bottom chart here, we're showing the Paris Agreement objective of reaching 1.5 degrees global warming. And what we see is actually the current policies, i.e. green countries, are really